Hello Wolfpack, as we approach the bottom on Bitcoin, and yes, I think we're approaching the bottom on Bitcoin. I think the bottom will be in October or November, and I've made that extremely clear in any one of my previous videos that you can watch. But mostly today, I just want to talk about this. As we approach the bottom on Bitcoin, and whether you agree with me or not, if you agree with the 4-year cycle theory as a premise, which you should have no reason not to agree with, by the way, because it's an objective trend, you should be thinking about where the next peak levels are and when they will be. Because what we have with the 4-year cycle theory is a date range trend. And we can extrapolate that date range trend and get that data to match up in future cycles and get a good idea about where Bitcoin can be in the future. And what you can do is you can use this as a rough estimate in your investing and financial plans as an expectation of where Bitcoin will be and how much money you might have. So let's go ahead and check this out. And I'll go through from step 1 all the way through to the end so you get a good understanding of what the 4-year cycle theory actually is. This is an extensive breakdown. I haven't done a breakdown this extensive before. So even if you think you know what this is, I think you should stick around for the sake of clarity here. I'll try and keep it short and sweet. Let's get into it. So the 4-year cycle is a date range trend based on the halving. What we'll go ahead and do is outline when the halvings were on Bitcoin. Okay, so we had a halving in 2016. Now, I don't know the exact dates. I think it's around May in each time. So just bear with me on that. But essentially, the premise remains the same. So May 2016, May 2020, and then we had one in May 2012. So hopefully that's available on the screen here. Yeah, it would be. So just say July, whatever. All right, so those are the halvings on Bitcoin. And these halvings triggered 4-year cycles, okay? And this is what the 4-year cycle is. It's not just imaginary. It's not just made up out of nothing. It's not just a random trend that exists for no reason. It's actually based on concrete fundamentals. And this is why I like the date range trend. This is why I like the 4-year cycle theory. It's not made up. You know, we can point to the direct cause of the 4-year cycle theory. It's the halving of mining rewards on Bitcoin. Okay, and what you can see is that patterns are already showing. You can already see it leads to patterns. You can already see that after the halving, okay, bull market, and of course, bull market. And that's 3 separate data points. And as you guys know, let me just change that. That's 3 separate data points. As you guys know, you need 3 data points in order to see a trend. And that is, of course, a trend. After the halving, we see a bull market, right? Now, for most people, that's where they'd end the 4-year cycle theory. That's where they just look at that and be like, all right, there's nothing else to it. That's it, right? And a lot of people would be like, okay, well, if that's a trend, what about percentage gain? How much do we go up during the bull market? Now, that's not how it works, okay? The 4-year cycle is a 4-year cycle. It's called that for a reason. 4-year cycle. It's not called the 10,000% cycle or the 5,000% depreciating by 20%. It's the 4-year cycle. It's based on dates. It's not based on price. Very, very important that you get that correct. So once you realize it's based on dates, you can start to analyze date range trends. Prices aren't relevant. Date range trends are relevant. So what we can do is be like, okay, well, how can we get a trend out of this? How can we take this seemingly abstract data and get a trend out of it? Well, all you need to do is identify patterns, okay? So we can say, okay, well, how many days are there between each top? And you can start identifying that. You can say, oh, there's 1,400 days there, all right, and then 1,400 days there. That's a coincidence by itself, but then you can be like, okay, what about between each bottom? Okay, so you can identify there's actually 1,400 days between the bottom there as well, and we can speculate based on that, because we've got 3 1,400s coming up, coincidentally, apparently, according to some people, and then you can be like, okay, well, what if there's 1,400 days, just for argument's sake, between the bottom in 2018 and the bottom in 2022, sorry, so that would take us to Q4, okay, so now we've got kind of 1,400, that numbers coming up a lot, but it's not really enough to convince us it's a trend yet. So let's delete all of that. Just keep it in the back of your mind. That came up a lot. We could be like, okay, well, what else can we look at? We've gone top to top, we've gone bottom to bottom. We could look at top to bottom, for example. And we could say, okay, there's around 400 days between top to bottom. And then we can look at this here and be like, okay, well, there's around, again, 400 days between top to bottom. That's interesting, right? It's not convincing yet, but it certainly is interesting. Okay, and then we can look at, okay, what about bottom to top? Right, we can start to see, okay, well, there's exactly 1,064 days from bottom to top. And then again, there's exactly 1,064 days from bottom to top. Okay, so now we have 4 separate data examples. Okay, we have, and we'll flip back to the main chart, days from top to top, days from bottom to bottom, days from top to bottom, and days from bottom to top, all of which line up with each other. All right, and that's when you start to realize, hey, wait a second, we have these 4 separate data samples all lining up with each other, and we also have the vague fact that after the halving there is a bull market. This is more than just a random kind of coincidence. This is actually a trend based on the halving, right? And that's what the 4-year cycle is, okay? So now that we understand that, now that we understand all these trends exist, we can actually go ahead and extend it, okay? We can extend it and say, okay, 1,400 days from 2018 bottom to 2022 bottom. That would put the bottom in Q4, and that's why I'm saying November and October are most likely to be the bottoms for Bitcoin in this cycle. But then we can go further and say, okay, well, let's extend it even further than that. And we come up with these results here, and we can see that the next bull market top on Bitcoin will be in October 2025, and the next bear market bottom on Bitcoin will be in October 2026, based on the 4-year cycle theory, assuming it holds true. We can also then go ahead and be like, okay, well, now, assuming we have this data here from the bottom, we can start to maybe try and turn this into a price trend, okay? I know it's a date range trend and dates are more reliable, and that's why this October top and October bottom in 2025 and 2026 is always going to be reliable, but these prices aren't going to be reliable. What we have now, right, is a lot more data than we had before, and so we can try our best to turn it into a price trend as well. And I've done this here, and I've taken the data, I've said, okay, look here, okay. From bottom to halving in 2016, right, I've taken the data. From bottom to halving in 2020, I've taken the data. From speculated bottom to halving in 2024, I've taken the data, right? I've essentially said all of these things, and it's a whole variety of, information here that would take me, 15 minutes to explain. But you can go ahead and read it here, okay? I'm going to just go ahead, take a read of these blue data points here, and you'll see that I've gone through all the analysis. I've taken data from bottom to halving. I've taken data from halving to top. I've extrapolated that. I've given the estimated bottom on Bitcoin. I think Bitcoin will bottom out at either 18K or 13K, right? So double bottom at 17.5K or 13K. I've taken that. And I've said, okay, if that happens and we apply the data that I've had here above, where would Bitcoin top in 2025? And I've identified that if Bitcoin bottoms out at 18K, let's just say 17.5K, in this bear cycle, right? If it bottoms out 17.5K in Q4 in this bear cycle, in line with the 4-year cycle theory, we would have enough data to extrapolate, right? And that extrapolation will take us to 244K in 2025 October. Okay, so again, if Bitcoin bottoms out in this cycle, in Q4, as per the 4-year cycle theory, at 17.5K, we will top out in 2025 around 244K. In October 2025. Now, if we bottom out at 13K instead in this cycle, okay, we go down in Q4 this year, we bottom out at 13K instead of 18K, we will bottom out at 170K in 2025. So you can see, the lower we bottom out in this cycle, the lower the next bull market top is going to be, because the whole mathematical equation kind of, gets diminished, right, the lower we go. So again, 18K bottom in Q4 this year would be a 244K top in October 2025. 13K bottom in Q4 this year would be 170K top in October 2025, okay? And then we can say, all right, well, based on that, and assuming that plays out perfectly, which is a big assumption, by the way, it's a rough estimate, we can say, okay, well, if we bottom out at 18K this year, that means we top out at 244K in 2025. And if we top out at 244K in 2025, we will bottom out at 87K in October 2026. Okay, and under that same logic, if we bottom out at 13K in Q4 this year, we will top out at 170K in October 2025. And if we top out at 170K in October 2025, we will bottom out at 34K in October 2026. Now that's a mouthful, okay? And I know that's a lot to digest because I've just said a lot of words there. But again, I encourage you to read this data. All right, I'm going to say it one more time, okay? The 4-year cycle, if it works perfectly in this bear market we're currently in, if it works perfectly, we will be able to identify a price trend as well as a date range trend. We'll have the data to do that. And that's what I've done here. I've speculated, okay, if this works out, which is an if, but it is likely in my opinion. If it works out, we will be able to predict that Bitcoin will top out at these prices on these dates, and it will bottom out at these prices on these dates in the next bear market and the next bull market. That's very interesting in my opinion. Let me know what you guys think about it, right? Obviously, it's very speculative, and obviously it relies on Bitcoin bottoming out in Q4 this year. But if Bitcoin does bottom out in Q4 this year, right, it becomes valid. And then we have a cheat code to the future. And that's the beauty of the 4-year cycle theory. We want that cheat code because as investors, we make money by things being predictable. And that is the most predictable thing we can have. So let's hope we bottom out in Q4 this year as per my prediction. Let's see, guys. Thanks for watching. Go to my YouTube channel homepage and click on the join button. You will see a tab that comes up which shows you all the information of the V.I.P membership with the Wolves of Crypto YouTube channel. What you get in return for 40 AUD a month, which works out to be around 30 USD a month, is 4 exclusive trading setups per week, which have been extremely profitable in the past, prioritized reply to comments on my end, a trading psychology lecture, which is extremely useful, and some people have actually said that's the most useful video I've ever made. It goes into a deep dive into the actual mechanics, psychologically speaking, around trading, and then also an exclusive Telegram group access link, which has over 200 members currently, and so you can go in there and discuss the market 24/7 at any time of day. We've got members from all around the world in there, so go ahead and sign up to to VIP membership using that join button there. Moving forward, we're going to talk about BitGet, and this is the exchange we use on the VIP membership. So this is all the VIP members use this exchange. Now, I actually was using this exchange before I had a partnership with them. I was the one who reached out to this exchange asking for a partnership because I genuinely think it is such an improvement on the major exchanges like Binance and Coinbase. Why do I think that? Well, first and foremost, it's got 0 fees on spot pairs, which is saving you a bunch of money. On top of that, it's got 5 times lower fees than Binance on futures trading. So immediately it establishes itself as an extremely cheap and efficient exchange to use for everyday trading and even investing, honestly, if you're investing with considerable chunks of money. On top of all of this, it holds true to the values of cryptocurrency. And it does that by being non-KYC on your end optionally, which means that essentially, all these other exchanges here, heavily centralized. They require you to put your identity in. They require you to kind of, trespass and encroach on the values of cryptocurrency. BitGet doesn't ask you to do that. You can do it if you want to for tax reasons, but it doesn't ask you to do it. It's not mandatory. You can use this exchange globally, and you don't even need to link your identity to it if you don't want to. Now, that doesn't take away from the safety of this exchange, because this exchange actually has a protection fund, and we'll click on the link here. And essentially, they have deposited 6,000 Bitcoin and 80 million USDT onto this exchange to make sure that in the occurrence that someone loses their money on the exchange via a hack or whatever like that, you can make a request here and you can get that money refunded to you, provided it was not the fault of the exchange. So that's very interesting as well. Not many exchanges have anything like that. So go ahead and sign up to BitGet using my referral link in the description below, and you will additionally gain access to a reward center with over 4,000 USD in rewards. And on top of that, adding to the list here, you also get 10 USD dropped into your account straight away after you make your first trade using my referral link exclusively. So go ahead and do that. You're supporting the channel in doing that as well. It's completely free and it takes 5 minutes. Thanks, guys. And then lastly, we've got the Crypto Academy. Now, this is for people who want to learn how to trade. So if you're interested in learning how to trade, I recommend this course. This is a course developed by myself and Megawell Crypto. If we scroll down at the bottom, you can see Megawell Crypto, big analyst in the space. We work very closely side by side, share a lot of the same ideas. We also challenge each other on some ideas. And so we've got 2 perspectives together in order to form this one course. You can go to the website and read the bio. Essentially, it's 10 units. It's very comprehensive. It's very extensive. And it's going to teach you everything you need to know about trading in a cryptocurrency market. And to be honest, any financial market. It's going to teach you how to learn those charts. It's going to teach you the right mindset. It's going to teach you how to find the trades, etc. You can join us here. Go to the website, scroll down at the bottom, and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the rest of the information. Thanks for watching, guys. Cheers.